More millionaires has been created through real estate than almost anything else out there. But the question is that about to change, or has it already? It's already happened in stocks. It's already happened in crypto. Is it going to happen with real estate? And in this video, I'm gonna share with you my exact strategies to win no matter what type of market. If the market goes up, sideways, or down. So if you were anything like me, about a week ago, literally I sat consumed for 24 hours sitting in this chair, looking out the window, thinking about everything that could go wrong. Stressing about the economy, the interest rates, my real estate portfolio, my businesses, my income, everything. I was sitting there and I was so focused on all the negativity that I could think of and how everything can go wrong. And then it finally clicked and I snapped out of it, because the thing that happens is when markets crash, money doesn't just disappear. Somebody's getting filthy rich if a market shift was going to happen. How do I position myself to be on the receiving end of that money? I got consumed with that. I was like, all right, screw the negativity, forget all the fear, all the backlash, how everything's going to fail. Let me figure out how I can be on the receiving end and make a ton of money while doing it. So think about this. In real estate, I own a ton of rental properties. So if the market is going to crash, what happens? Then people lose houses, home ownership, which means they come to rental properties. Rental properties is not changing. The supply of rental properties is not changing, which means demand will go up, which means theoretically supply and demand, that the rent income would increase. I'm not saying that is going to happen. It could very well potentially happen. And guess what? That means landlords, people who own rental properties, will make more money because they'll be collecting more income. So if you already own houses, or if you're looking to purchase properties, something that you need to do is be very aware of what adjustable rates actually mean and balloon payments actually mean. So what that means is, let's say your loan is a 30-year loan or a 20 or a 25-year loan, whatever it is the interest rate locked for 30 years or is it locked for 5 years and then it becomes adjustable? So you might have a 4% interest rate, from 3 years ago up until the next 2 years, and then it adjusts to the then market rate. So what if market rate's 7%? You go from 4% to 7%, your cash flow shrinks very, very quickly because you have substantially more going out to pay your principal and interest payment. That's not the end of the world though. If it adjusts, your principal payment would be down a little bit. Your principal owed on the mortgage would be down a little bit, which means that even with the increase in rate, it's still going to go up, but it's not going to go up like crazy. But the thing that a lot of people get screwed up on this, and this is what happened in 08. People were on balloon payment. So what does that mean? It's a 30-year amortization. The interest rate's fixed for 5 years, and then it's a balloon payment in 5 years, which means 5 years in, let's say they took out a mortgage for 200 grand. 5 years in, let's say they owe $175,000 then. This means that they have to pay off $175,000. An adjustable rate adjusts. It's a balloon payment means that the debt needs paid off as soon as the balloon happens. So what happened? In 08, a $200,000 house crashed in value by, let's say, 20%, which means that house is only worth $160. You still owe $175. So now that house cannot be used as collateral for your loan. So you had to come up with $175 grand, and if you sold the house, you still wouldn't have $175,000. So the problem comes in, foreclosures started happening because people couldn't afford to refinance because they owed too much on the property, and the banks were looking for their money back because they had a balloon payment. So what I did is I went through my entire portfolio, looked at all my notes, my promissory notes, which tells you, how long the note's for. Is it a balloon payment? Is it an adjustable payment? Whatever it is, and made sure I didn't have any balloon payments. Actually, in the process of refinancing a couple loans that I wasn't a fan of long term because the adjustable rates were coming up here pretty quickly. And at the end of the day, I think rates are going to continue to go up. So lock in rates now, because again, rates are just going to continually increase. 3, 5, 10 years from now, no idea what rates are going to do. Next 1 to maybe 2 years, rates are going to continue to go up. So look at your portfolio and refinance anything you have to so you can get into better debt. And if you're looking to buy a house, make sure you're not buying a house financed on a balloon payment, and make sure it's either a fixed rate loan or an adjustable rate that does not have a balloon payment on it. So if you learned something new there, make sure you smash that like button, hit the subscribe, and drop a comment below for me. I'd appreciate that. And then number 2, the second thing I started thinking about, home ownership is the American dream, right? Every single day that goes by, that American dream is becoming less of a reality because housing prices continue to skyrocket. And with housing, when people retire and or pass away, a house is usually the biggest asset that somebody owns. You have to own real estate. Somebody else put it like this to me a couple days ago. They said it's almost impossible to retire without owning a house, because what happens is if you're renting, every year rent goes up. So So your standard of living gets more expensive every single year, even if you don't increase the standard of your living. By staying the same, it continues to go up. When owning a house, you have a fixed rate payment that'll be the same for the next 30 years, ideally, if you lock it in long enough, which means that you can retire and know exactly how much you're going to be paying every single month. So what's going on behind the scenes right now? Hedge funds are stacking a ton of cash. If this thing crashes, they're going to come in and try and buy up all the houses, which means, again, dream of home ownership will become almost non-existent. So what am I doing right now? I'm stacking my cash, literal cash, not physically paper, but like money in the bank. I'm putting as much money in the bank as possible. I'm not recklessly spending on things. I'm not going out and buying new cars and watches and things of that nature. I'm stacking cash in the bank. And more importantly, I'm talking to my private money lenders, my bankers. I'm having conversations with them. Hey, what's going on with the market? Hey, are you comfortable still lending? Hey, I just want you to let you know I'm extremely confident in this market. Here's my plan. I'm going to buy houses at a discount when this market crashes. We're going to be able to pick it up for 60, 70 cents on the dollar. Can I count on you to be able to lend me money if and when that time comes? You got to be proactive and have those conversations, because if the bottom falls out of real estate, all these lenders out there are going to be extremely, extremely fearful, and they're going to pull out and not want to lend money because they don't know what's happening. If you come in and you're the confident person that can give them confidence, they have a much higher chance, probability of lending you money. And if you can get access to money, literally, if a market crashes, it's the greatest opportunity ever, because that means you can pick up houses for, 50, 60, 70, 80 cents on the dollar, build a massive amount of wealth without having to use your own money. So I'm having conversations with my private money lenders. You need to be building those relationships, digging your well before you're thirsty. Always be talking about private money to people to get access to it, so when the time comes, you're ready to pounce. And number 3, what you need to do is be real with your numbers. Now is not the time to buy on speculation. Now is not the time to try to create new markets and build this, masterpiece of a house when the market isn't there for it. Now is not the time to make the deal only make sense if you max out your ARV and sell it for $20,000 above listing. Now is not the time to do those things. So am I stopping to buy houses? Absolutely not. I'm still buying houses. I bought a house this week. I bought a house last week. I'm still buying properties 100%, but I'm being very realistic with my numbers. I'm not overshooting the ARVs. I'm not undershooting the renovation budgets. I'm being very realistic with my numbers. And you got to remember, there's a lot of fear and uncertainty and unknown in the market right now. So sellers will sell you their house for a discount because they don't know if the bottom's going to fall out. If they can capitalize and make 50 grand today, or if the market falls out and then they're underwater and they can't sell, like, you will still get deals. Just please, please, please be very realistic with your numbers, because you don't want to lose money. That's worst case scenario. I've been there, I've done it. Losing money on flipping a house is not a good feeling. So you got to be realistic with your numbers. And look, at the end of the day, real estate markets, if you zoom out, they continue to go up over time. There might be some of this, run up, crash, run up, crash, run up, crash. But guess what? It's continuing to go up over time. So every time it crashes, you want to be able to take advantage of that. And the best way to take advantage of that is to raise money from private money lenders to fund your real estate deals, so you don't have to use any of your own money. That's what I've done my entire career. I've borrowed $20 to $25 million from private money lenders to fund all of my real estate deals. So if you want to learn exactly how to do that and how to go out there and raise money, make sure you watch this next video. Appreciate you being here. Peace.